Hey guys, what's up? This is Andrew for TRENDLINES.com. So sorry I didn't post anything for quite some time. I was actually feeling not well. I was sick. I'm not sure what I had, but I can tell you that in Hong Kong, you don't want to find out if it's the COVID or not, because if it is, they simply put you in quarantine prisons. So anyway, I feel much better now, so I guess it was nothing too bad. And I'm back, guys, to make a huge update on AMC. So let's get into it. Alright guys, so I don't remember when I did my last update, but we have a lot of things happening here. So the first thing, for those who want to have my daily update, it is still available on Discord, and even if I'm sick, I'm still gonna post every day an analysis on GME and on AMC. So if you want to see what I have to say, you can just go and check it out. So let's go on a daily time frame first. We have this fourth corrective wave. I think that we're on a fifth wave, that we're going to the 100, 130 area. All right, this is my view. Now, in this fifth wave, we're going to have probably a 5 waves move up. So we had already some bearish first signals appearing here. So let me go on the fast time frame. We had here, you see the MACD going lower. So each time you have a move up, you can use this on any stock, any asset. It works on crypto as well. Anytime you see the MACD going lower and the market making new highs, okay, this is the first signal of potential correction to come. But sometimes you have those bearish divergences and the market is still pushing higher and higher and higher. It's the same thing on the downside. So it's not enough by itself, but it's a first sign. And we had it here. So I told you guys we had this divergence, then we went slightly above, and finally we had this evening star pattern that was identified 2 days ago. So basically it's not perfect because the gap is actually filled with the tails here of the candles, but you have one candle, like one isolated candle after a huge bullish trend that is followed by a gap down, and we had a gap up before this candle. So this is the evening star. Once again, it's not perfect because the gap are filled with the tails, but it's still a bearish pattern. So after that, we were expecting, of course, some bearish momentum to pick up, and this is what looks to me as the first corrective wave of this 5 waves move up. So we are here, 1, 2, 3, 4, 5. So it's too early to talk about the third wave, but for now we're in the second wave. So we had this evening star pattern. Then if I zoom in a little bit, what happened afterwards, of course, was a strong selling pressure yesterday in the morning session. And we found support in the middle of our support area. So we have identified supports at 45, 42 and 39.5. So this is the one that acted as support. You can see the 20 period moving average acted here very well as support, but it was hard to predict. It was not perfectly respected before. Here we have one clean reactions. So quite hard to use this one to enter, but still it acted here as support. So right now, what is the situation? Like I said this morning on my Discord, we have here a hammer. All right, so here is the evening star, and now we have a hammer. It means that, so basically when you have the head of the hammer that is here, and you have the huge tail on the downside, which means a lot of bears have been caught. So this is kind of, to me, canceling the bearish effect of the evening star that otherwise could last, 1 week or 2 weeks. So this is a bit coming to cancel it, but it's not as powerful as the evening star. So I would say that the favor is, let's say it's neutral, but I think we still gonna have a pause. So maybe, we need to be aware of the fact that corrective waves, they usually develop in ABC. So we had an A, so maybe it's a B, and we're gonna have a C. So the C wave doesn't need to go below wave A. It can be a flat, all right? So it will depend how high we come back. But for me, as long as we are below 48, we are still in this corrective phase. So once again, I'm very convinced that once it's finished, we're gonna have even stronger wave starting. But for now, I don't have the signals that the second wave is complete. Once again, if we close above 48, it will be a first good signal that maybe this correction is already complete. But I would like to see, you see the bullish wave, it lasts around 1 month. So I would be surprised to have a correction of only 3 days. Usually if you have 1 month of bullish development, you need to have at least 1 week of correction. And once again, it doesn't need to go deeper. It only needs to last maybe a bit longer. So I think that there are going to be many opportunities here in the coming week to enter this trade if you are still not in there. So now let's check quickly the synthetic short interest on AMC. So here we were checking cents. By the way, we have this one in our option book, in our live trading portfolios on Discord. So very quickly, for those who are interested to know what we do there, we are trying different strategies based on breakouts, mostly on momentum, Elliott wave, Fibonacci, and we are going to record every trade we do and see what is giving us the best results. So roughly we have a growth target of 5% every month. So let's see if we manage to do this, but this is what we are trying to achieve there. So let's go back to AMC. So this is something we pay attention a lot, all right? For every trade we take, we check this because the option market is giving you a lot of information. So here we are at, so the maximum synthetic short is 21%. So it didn't move since last time we have checked it. We can check here, AMC. Okay, so on the 27th of August, the max was 22%. All right, so we are slightly below, but it's roughly the same. Okay, I'm going to record what is happening up. Now I added this one for this month. So let's see where this is coming from. We have the September, which is a quarterly expiry. So which is a big one, so monthly and quarterly. September expiry in 2 days. So let's see where do we have a lot of options. Okay. So basically 40, 45, 50, 55. So we are right now around 45. So what we are here paying attention to is those options that are out of the money, but can suddenly get back in the money because they are going to cause a lot of troubles to market makers. So we have here one, you see 30% delta. So this one is dying. This one is already dead. All right. The 55 strike call for the 17th of September maturity has a delta of 15%, which means that if suddenly we go above 55 on the expiry day, market makers, we need to buy 85% of the number of options that we have here on this strike. And you have around 5 million options here. And this is true for this strike and this strike as well. So I would say that around 45, there is no big activity. Okay, we have only this one with 20,000 option, which is not that much. We have 3 million in total for this strike, but on September, we only have around 2 million. And you can see that it's bigger for the more upside strikes. So I would say that if we stay around 45, nothing much would happen. But if suddenly we start to trade above 50 or 55, we might have some crazy moves happening on the expiry day. And once again, because of those very out of the money options where we have very substantial amount of open interest. So guys, that's it for me. I hope you enjoyed this video. I will make one for GME today. I will also make some videos where we explain every trade we do on our live trading portfolio. So this is going to be only for our platinum members so that you guys can follow what we do. We're going to post this very soon in the Discord or maybe private on YouTube. We're going to see. So if you did enjoy this video, please don't forget, guys, to click on the sub, like, and bell button so you're going to be the first to know when I upload anything new. And stay close to shore. I'll see you guys.